Hello guys. Thank you very much for watching the video. And as you know, my question was very simple is what do you do after you buy a stock? Okay. Um I get some answers. So I will report them first and then I will discuss them. Okay. So please continue watching until you see what the guys have said. And then I will answer with my own question. Thank you. Hello, guys. So after I made the video about a question that is never answered by traders, so as we can see, the first subscriber is called Yogesh Yul. Sorry for pronunciation. Now, what did he say? He said, I would say before buying stock, only we should apply how much money you want to lose if you selected your selected stock fails. Define your stop loss. Position sizing as a per year risk. Yes, I see here some information about some strategy that he uses. So I ask him the question. What is it here? Please answer the question. It means I ask more information. Now he say two things I usually do after buying stocks. Set stop loss as per defined risk. It means he used the stop loss. Book the 100 profit near resistance. It means that if he has 100% profit, let's say he buys the stock at 100, it goes to 200 and he will sell. Okay? If there is no resistance upside, then usually book 50% profit if stock gives 1/2 risk to reward. That's it. My fundamentals means is very simple about entering and exiting from stocks or stock. Now, this information that he said, I use some, but I don't do the same because he is giving the whole strategy what he is doing. But for me, this strategy is very, very limited, and I will explain why. Okay. Now we go to the second one. He say I buy a stock and see it 2 or 3 times every day. Now this is a big mistake because you are wasting your time. Okay, so I will explain the answer when I do this. When market opens, how many my profit or loss? It means the next day. Easy. This is not really swing trading. So this guy, it means he has a flu or a vague understanding of what is swing trading. Okay, we don't see our stock 2 or 3 or 10 times a day, so this will be very overwhelming and we don't need that. Okay, I will explain later about this. So buy a stock, then set a stop loss. This is a very simple thing. We will discuss this. And then another one, I wait to go up, and if it reflects, I sell. Maybe he means if it goes up, I will sell. Yes, but what if it goes down? What do you do? Okay, so these are some information that we get about this. So let's begin and check. Okay, check my answers. Now the first one is set a stop loss. Hello guys, as we have seen the answers. So I will just go very, very quick and tell you what I think about them. So the first is saying, the first answer, it says, set stop loss as per defined risk. Now, this is a good thing. Now, defined risk is everyone has a defined risk. So the risk is not the same for everybody. Okay? If you use, for example, percentage, some use 2%, one use 5%, one use 10%. Some other people, they don't use percentage, they use other things. Okay? So when we say defined, it's not really defined, because who will define? No one will define your risk. It's you who should do it as your perception of risk. What is it? Okay, so it's not defined. Now I will show you another thing, that stocks are not the same. Okay, so every stock has his own defined risk, depending on you, how much you can bear as risk. So this is the first thing I want to say. Second thing, he said, book the 100% profit near resistance, or 50% if it gives 1 to 2 risk reward. Now, I don't believe in this risk reward, 1 or 2 or 3, or I don't know what the people are saying. And I don't believe in stopping the trade because I got some money. So in my strategy, it's totally different. So I will explain my strategy very, very well. So this is his strategy, taking 50% profit. Let's say you put $10,000 in a stock. After a while, you get 50%. It means your money goes to 15,000, and then you close. So you close because of this. So if I ask you the question, this guy who is Yogesh Yul, I don't know how to pronounce it very well, but the first guy who answered, why? Who tells you to stop the trade? This, for me, for my own strategy, it's a mistake. Even if you get 100%, it's a mistake to exit. Now, if you tell me when to exit, I exit when the trade finishes, when the trend finishes. I am following trends. I am not following percentage of profit. And I will show you that everybody who does this is wrong. Okay? Now, this is the first guy. So the second guy, he says, I will buy and watch 2 times or 3 times my daily. When the market opens, how many my profit or loss. Okay. Now, first, why you watch 2 or 3 times or 10 times, especially when you have an app broker and you are at work or you're outside and you check every time you check. This is not what I do. Okay. And next morning, profit or loss. And then what do you do? Which means if you continue like this, if you have a loss, what does it mean for you? Do you exit? And why you exit? It's just because of loss. And what is this loss? Because when you say a loss, it's not defined. This loss, it is not defined. Is it by percentage or is it by something else? It's not defined. Okay? Someone, for example, the stock goes down $1. Let's say I have $10,000 in a stock. Tomorrow, I find that it goes down $1, $100, for example. $1, it means from 100 shares. Let's say it is $100. So am I going to sell my stock because I see $100 loss? Is this what you are trading? So this is a mistake in trading. In swing trading, it's a mistake. Now, buy a stock. Number 3, the third guy, West Place 2001, who is one of my old followers and subscriber. He said, buy a stock, then stop loss. Yes, this is a very general, but I will discuss it later when I answer my question. And number 4 is my one of my oldest subscribers and student. He said, I will go up and it reflects I sell. It means if it's going up, I will sell. But this is general. It doesn't say nothing. Okay. Now let's give you my idea about what to do after you buy a stock. After buying a stock, you should know where to exit if you have a loss. And this is what we call stop loss. So whenever you buy a stock, you should have a clear idea where you exit if the stock is against you. This is one of the most important things that I'm telling you. Don't be mistaken with that. You should know. It is not you buy and then you leave it for 2 days or 3 days or 10 days and then you decide. Because here is the problem. When it's going up, it's okay. There is no problem with that. But when it is going down, most of the beginners, they don't sell. And this is a psychological problem. I have spoken about this. And anyone who is a beginner, he will have this problem. It's a psychological problem. It means you don't want to sell because you see a loss. And you say, no, I will stay until the stock come back. Okay? This is the this is the idea of the beginners about the stock. It must come back. But understand that the stock cannot come back. It can go 10%, 20%, 50%, like what happened this year. Let's say in December, your stock was doing good, and then from the 2nd or 3rd January, it's going down. You get a problem, psychological problem. You don't want to sell because you think the stock will come back, but it will never come back. You can lose 50%, 60%, 70%. I have seen stocks that go 90% because you get a psychological problem. So for a professional trader, if you are an experienced trader, you should know exactly which price you are going to exit when the stock is against you. Now, putting stop loss right now, before I was with, but right now with all the brokers, they play with this thing. They exit you because the game has changed in the way brokers do the job. It means when they see they try to see the bidders, what is the bid, and they sell your stock, although it's not the price that you decide. And then when you exit, you find you are exiting above the price you decide. And then some people, they don't know, but I see it myself this 2 or 3 years or 4 years. Things have been changing and they are not like before. So what I ask you guys is to put an alert in your app or something. When this price reaches, you go to your app and you exit the trade. This is the easiest thing, and this, it doesn't cost you, that the broker and the market maker plays with your stock. And you have, maybe sometimes you see the stock is going up, it's good, sometimes it goes a little bit down, but they exit your trade, because when they exit the trade, they have commission. And the FINRA gets some money from your sale. So it's something good for everybody, for the broker, for the market maker, and for FINRA, which is the government agency. So all they get money from you, although you don't want to go to exit at that price. But this is a technical issue that it will never be solved. It's over. I have seen it. I have contacted them sometimes. I say, why you exit my trade? It didn't reach the stop loss. This is before, like 2 years or 3 years ago. It was good. But the brokers have changed. So, guys, if you see this, try to see at what price. If it is the price that you set or down, it's okay. Because when the stock is going down very fast, it can go down little more than what you put. This is okay. But the problem is that you exit. For example, you buy a stock at $10. Let's say you put stop loss at $9. It's just an example, okay? But later you see that you exit the trade and the stock is $9.50. It has not gone to 9. So you ask yourself, why? Why they sell your stock and it is not? It's not $9.50, it's 9. So even if you go to your broker, they will try to play with you and you say it's this, it's the bid, they will try to, but this game has been for many years and no one will solve it. And if you continue to play with them, they will take all your money. And you put stop loss, they feel it. They feel it without your permission. It's like without your permission, and you can't just go and quarrel with them. You quarrel the whole day, the whole years. Nothing will change, because this is a game changer in the whole industry. You can't do that. Now, another thing that I see in the first answer is taking profits. I am against this idea of taking profit because of percentage. I will tell you why. And you will be astonished that you are totally wrong. If I ask you the question, why you put 50% and you exit, what's the reason? You in your mind, there will be no reason. It's just because someone else, a trainer or a stock or a guru that you follow, or you take another training from another guy, and he tells you, okay, you have 50%, it's enough for you. Just exit. Why you stay? Because most of the stocks, they go 50% and they exit. Who tells you that stocks go 50% and they go down? Who? Or 100%? Who tells you this? Show me this in real trading. Where? So this idea is totally wrong. I can give you proof. Wherever a stock you give it to me, I will give you a proof that you are wrong. You are wrong, totally wrong. Okay? Except when the stock, for example, goes to 60% or 70% and it's going down, and then you exit. Now, this is another thing. This is another thing. It's not what we are talking about. We are talking just about, you see, it's 50% or 100%, you sell. This is what I'm talking about. Okay. Another thing, another guy said, you buy a stock and you watch it 2 or 3 times a day. Now, if I ask you the question, why you watch the stock going up and down in one day? We are swing trading. We are looking at the whole day. At the end of the whole day, what the stock has done. We are not looking for every minute or every hour what it has done. Okay, so this is something very, very important. And you see each day in the morning or the afternoon, you see how much. For me, what I do, I can just take a look. I see what the stocks are doing, but it's not. But usually, I see at the end of the day if there is a major problem, or there is a gap up, or there is something big happen to the stock. Not the stock goes $1 up or down, I will worry about it. I don't. Now, the whole reason I'm saying this is because there is what we call stock management. It means when you buy the stock, you should have a management for the stock until you exit. You should know what you are doing. Okay? And what we do for the stock in the future. Because the stocks, you can stay 2 months, 6 months, 7 months. Okay? 7 months, 8 months, 9 months with the same stock. It's giving you money, so why you exit? Okay? And this is stupid thing, just to exit because of percentage, or to do like this or like that. Okay? So for me, I don't see the profit. I see the trend. Because for me, I am following the trend. I'm not following the profit. Because the profit, you will never know how much you get. But the trend, when it ends, it will show you how much you have made. And if it's going down, you exit. And now, this is strategies that I developed and I taught since 2011 for all my students. And most of my students, they know these strategies and they follow them. Okay? So, guys, thank you very much for watching this video. And if you have questions, you can send me direct message for the email. Always the email. You can send me a message, and I will as usual, I will answer your email. And if you want to check what is the training that I do, this stop loss and management, you can find in my training. If you don't know, just shoot me an email and I will explain to you, because the strategies and techniques, they are very defined. It means you should do this in that situation. You should do this in this situation. Situations are not the same. Stocks are not the same. And people are not the same. My risk tolerance is not the same as you. It's not the same as other one. So we can't do the same thing for the same stock, except when we follow the same strategy. But if we are different strategies, someone just he saw 20% or 10% profit, he just exited the trade and he was happy. Okay, and he leaves all the money on the table. Okay, so thank you very much, guys.